Yesterday, we saw that strong resistance come in at 10,835. Today, the SGX Nifty is indicating no direction at all. It's absolutely flat. So let's see where things go from here. Let's invite Ashwini Gujral, Sudarshan Sukhani and Mitesh Thakkar. Good morning, gentlemen. Ashwini, so what's the forecast for the day?
Well, good morning. Like I said yesterday, that this is a mature rally and these good news gap-ups will not work out. So the idea is that we are in some sort of a range because the sell-off wasn't very hard. So I would think, 10,650, 10,850 sort of range is possible. But now it appears that, the positives are kind of getting overshadowed by the negatives. So you want to trade ranges even on the Bank Nifty, maybe say 26,900 to about 27,500. It looks unlikely we are going for a major breakout or great buying is going to happen. We are range bound, 10,000, 11,000, give or take 100 points, and that should be it.
Okay, so maybe really range bound on the index, action shifting to stocks. There was a lot of that happening even yesterday. Good morning, gentlemen. Sudarshan, let me come to you. Market call for the day. What's the advice on the index?
Good morning. Well, I don't have actually a call for the day because the day is going to be pretty confusing. Last week we were buying, the market was buying all the dips, and yesterday it was selling the rallies, essentially creating a trading range. And more important than the trading range, the market was saying it hasn't the faintest idea of where it wants to go on a day-to-day basis. So I'm looking at where the Nifty is likely to be next week. And I would feel that next week we should be higher. January should generally be a bullish month. So with that view, I continue to say that my point is hold on to your Nifty and Nifty Bank futures or options, whatever, be on the long side of the market and look at all dips even to buy. But this is a positional call, not a day trading call.
Okay. We were getting news about the World Bank chief stepping down. There isn't much that we've got in terms of the reason. There's an interim president, so it looks like it's an unexpected stepping down and not an end-of-term stepping down. We'll have to await more details from the World Bank itself or from the wire services or agencies. We'll keep you posted. Mitesh, good morning to you. What's your trade? Is there a trade at all on the indexes today?
Good morning, Lata. Actually, the direction isn't very clear. So in that sense, no. I mean, you can basically work out with some levels and you can do some level-based trading. My sense is that 10,725 is the key support area on the downside. 10,830, 850 could be the immediate supply zone. So in case you are at the lower end zone, you might want to buy around the upper end zone, take some profits over there. But broadly, I'm looking at the 120-point range as the trigger. A move on either side would give me a directional bias. A similar setup is happening on the Bank Nifty charts, 27,450 and 27,000 being the boundaries on immediate hourly charts. And if that breaks, I think a 300-point kind of movement can happen. If it breaks on the upside, it could be on the upside. If it breaks on the downside, it could be on the downside. So as of now, I don't have a directional bias, but yes, I have the levels ready. And once we see a possibility of a breakout or a breakdown, then it will be a clear index call. Okay,
Datta, I started reading up a little bit. There's a update on the Washington Post. So he's leaving to apparently get into developing world infrastructure.
Infrastructure finance for developing countries seems to be his passion. But I mean, a sudden mid-term resignation, there isn't much
we don't have
in terms of reasons. Yeah, but you could get bored of your job. You never know. Okay, Ashwini, we have to drill it out of stocks. What would you trade today?
Well, PSU banks after the sharp run yesterday started to give back gains. So that area in general, BOI, etc., that could be in trouble. So Tata Elxsi is a sell with a stop of 980, target of 955. CEAT is a sell with a stop of 1295, target of 1260. BEML is a buy with a stop of 910, target of 945. Axis Bank is a buy with a stop of 630, target of 655. And Havels is a buy with a stop of 688, target of 710.
Okay. Plenty of buys on Ashwini's list as well. Sudarshan, let's get down to your stock list. You also have more buys than sells from what I see.
It's more buys than sells, but today there is no theme There's not even a sector where I can say, okay, this is what could drive markets today. Today is a pretty confusing day for me. So there are mid-cap opportunities on the long side, and they are all steady and in already ongoing uptrends. So we'll start with UBL, United Breweries. That's a buying opportunity. It's a day trade and a positional trade. Bata India, I spoke about it yesterday. That theme continues. Bata India is probably heading much higher. You can hold it or trade it for the day. And Cummins, which has gone through a bear market, bounced back and is now suggesting at least significantly higher levels. So there are three buying ideas from the mid caps. They are independently doing well. That's the only theme. Two short sells for the day, only intraday. One is Coal India. There seems to be breaking down, and CESC, same story.
No, I take your point that things are confusing. I tried to reach out to several bond and rupee dealers as well. Even in bonds, I mean, how long can you keep on beating the yield up by saying, oh, the farm package will come, oh, the crude is at 58. I mean, it's been that way for the last 48 hours or maybe a week. As well, the GDP numbers are softer. So is there a feeling that that's opening up space for a rate cut? I mean, the market's pretty confused. So, you know, that's why even the NBFC and PSU banks, as Ashwini is pointing out, is not giving us a very clear trend because the macros are not giving us a very clear trend, or so it seems. But let's look for advice from our experts. Mitesh, what would be your sector or stock-wise trades?
I have three buys and a sell. Cadila Healthcare, I think the intraday charts are poised well. So 343 should be a stop loss, 360 or thereabout should be a target. DHFL, I think the intraday charts is, or the candlestick pattern is quite negative. So I think this could be a good shorting candidate. Keep a stop at 234. Look for targets of around 216. I also have a buy on Godrej Properties with a stop at 698. Look for targets of 745. A good price and volume breakout happened over there. And my final buy call is in UBL. I think Sudarshan also highlighted the stock. Keep a stop around 1374.75 and look for targets of around 1420 on James.
Okay. Gentlemen, we'll come back to you. I actually want to flesh out the NBFC theme a little more. You've already given a sell on DHFL, Mitesh, but we would want to discuss other stocks with you. But there's another financial stock that's on our radar. PTC Financial has become the first NBFC to get a 400 crore rupee partial credit enhancement along with a 1,000 rupee long-term loan from SBI. Pawan Singh, the Managing Director and CEO of PTC Financial India, PTC India Financial, joins us. Mr. Singh, just 1 minute. I only want to take a second to explain a partial credit enhancement for a loan. So if a loan is given by, say, PTC India Financial and SBI gives a partial credit enhancement to it, what it means is if for a certain piece of the default, SBI will be responsible. For that, the NBFC in question, in this case PTC India, pays a little bit to SBI. That's what a partial credit enhancement means, and that permission for that was given by the Reserve Bank recently. Okay, Mr. Singh, just that preface, because we have not seen too many partial credit enhancement moves in the country. Can you tell us exactly how much SBI is giving you in terms of support, for what part of the loan, and how much do you pay SBI for it? Can you still make a spread if you give that loan?
The partial credit enhancement scheme from the banks for the NBFC has come for the first time. So it's a pioneer move. The PCA here means is that SBI will take first credit loss up to 20%, which enables me to get a credit enhancement.
Okay.
So, for example, of course, we have not got a final rating from the rating agencies, but we are A+, so we would certainly expect a credit enhancement there, which would lead to, you know, when I have a credit enhancement on my liability side, that is on the borrowing side, it brings down my cost. So, between us and SBI, there is a certain percentage of the gain which will be shared between us and the SBI. What is very important here is that this 400 crore credit enhancement allows me, because it's I can do 5 times, because it's 20% kind of a first credit loss. So I can do 5 times the amount. So that means it allows me to raise bonds up to 2,000 crores from the market. So I think this is a pioneering move, and to our company it's going to be a great support, because it will help us to improve our structural asset liability profile, liquidity profile, and also enable us to bring down our borrowing cost.
It's exactly my next question, sir, because what one understands is there's 400 crores of partial credit enhancement, and there's a separate sort of line, 1,000 crores long-term loan that you've also managed to get from SBI. So with this development, and I don't know at what cost this money has been raised, to what extent is your cost of funds coming down?
See, this is, first of all, it is going to be a major diverse source of borrowing for us. NBFC with rating of A+ and all were finding it little constrained to raise money from the bond market. This kind of a PCA will enable us to tap the bond market, and also at the same time, if I have to compare my A+ bond and the AA bond which I will get through PCA, I hope to get a 100 basis point benefit on the bond issue. And if I have to share, because we are working with SBI in the finer points of sharing the benefit, so even if I have to share maybe 50 bips out of that, it will give me a benefit of 50 bips to the company.
Okay. So, Mr. Singh, you said this 400 crore you can leverage and leverage 5 times. So this comes as equity, is it?
No. I mean to say that 400 crore comes as debt support. It's a partial guarantee. Okay. So, you know, I can do 5 times the partial, whatever is the partial guarantee amount.
Okay.
So I can raise debt up to 5 times. So enables me to raise debt of 2,000 crore through bond issuance.
What's your loan growth expected to be in FY19 and in FY20 therefore?
This year we have grown so far close to about 25%, and we hope to maintain this kind of growth as we close the year. And we hope to grow the similar way in the coming year also, or a little better than this.
And margins?
Margins with you know, this kind of liability management which we are doing. And also what we are trying to do is that on the product side, that is on the asset side, we are trying to have products where the spreads are a little better. So we hope to improve our margins, and you know, what we are targeting is a ROA of close to 2% ROA overall on the asset.
So, Mr. Singh, obviously, third quarter was the harrowing quarter. September, October, you know, towards November, December, things started easing out. At the end of the second quarter, your margins were at around 2.8%. I know you can't share a number for the third quarter, but just generally speaking, is that level going to be maintained? Can that margin number look better? Because you just told us that your cost of money has now come down by 50 basis points because of this move.
So the cost of borrowing in the bond issuance will come down to 50 basis points. So incremental whatever borrowing we will do will be 50 basis points. It doesn't mean that the entire book I get 50 basis points less, because whatever borrowing I have done, that remains at what it is. What is very important here is that as we are, you know, because some of our assets were in stress, and on that we were not getting ROAs. We have been able to, last quarter, we have been able to resolve 800 crore stress book.
Okay.
That should, you know, knock off my denominator. So as we look forward, as I said, that 2% ROA, which we have not been able to achieve this financial year, would be possible going forward. Okay.
So very quick questions on your loan growth. Your AUM actually was up only 7.9%, but of course that was quarter on quarter. And your disbursements were down 12% quarter on quarter when you last reported numbers. Are you still sure that on a year-on-year basis you can grow 25%?
No, see, disbursement, of course, is there, but last 2 quarters were also, the liquidity challenge was there for the company, and that is why we had slowed down on the disbursement. And if you look at the trend over the last years, first and second quarters, the disbursements are on the lower side. Only in the third and fourth quarter, the disbursements pick up.
Okay. So and what about asset quality? You said that some 100 crore has been resolved. Last time around when you reported second quarter, your gross NPLs was 6.4%. Should we see a meaningful reduction?
See, there are 2 types of stress assets which we have. There are ones which have fallen into NPA, and there are the asset class which have gone into stress, which, because we were not covered by the RBI circular NBFCs. So the reduction substantially has come, almost 150 crore in the NPA profile and about 650 crore on these gross stress assets which were not NPA, which could have become NPA going forward.
Okay. That's good news, sir. Very quickly, last question. Since you do have a 25% target in terms of growth, just for our understanding, what sort of borrowers are coming to you for money? Where are you seeing these growth shoots? Is it infra, power? Is it on the renewable side or the thermal side?
See, our book today has 62% renewable, and our experience with renewable is that there has been 0% stress. And this is an area which has been our strong domain, so we continue to focus on the renewable side. We have diversified into roads project. We have limited ourselves to HAM projects. There have been HAM opportunities available, so we will also concentrate on the HAM projects. Along with that, we will be doing transmission lines, and we also will be doing distribution companies. On a very selective basis, we may be doing port PPPs.
Okay, sir, we'll have to leave it at that. Thank you very much, Mr. Singh, for joining in and explaining to us the first pioneering move towards credit enhancement. We should be hearing more of that word in the days to come.